Okay, in today's tax session, we're going to look at what tax expenses you can claim when you rent out a property. In particular, we're going to analyse the difference between what's called revenue expenditure and capital expenditure, so you don't make mistakes on your tax return and you understand how certain types of expenses are treated for tax purposes. So on the board, we've itemised out the difference between the income expenditure. So this is a type of expenditure you can claim against your rental income every year to reduce your tax. And then we've itemised out capital expenditure. So capital expenditure is items that you spend money on which you can't claim against your rental income. These types of expenses you can claim when you sell the property. So let's look on the board here. So the revenue expenditure, we've got items such as general maintenance and repairs of the property, obviously rates, insurance, services, that could be gardening or any other services, letting agents fees, legal and professionals, that's solicitor fees, and obviously if you use an accountant or a tax advisor to help you produce the accounts and the tax return, that can be deducted. Motor costs within reason, and I've starred finance costs, mortgage interest relief. As we know, it comes now as a tax deduction, a reducer against the rental profits, the tax. You don't include it within the calculation itself, but it does act as a reducer at 20%. Now we look at capital expenditure. So the rule of thumb is essentially any item of expenditure which is going to increase the value or add something that wasn't there. Okay, so as mentioned, these expenses you save for your record keeping and then they get deducted against your capital gains tax when you sell the property. So we've listed some things here. So you've got obviously an extension, if you're building an extension to the property, installing a new security system, replacing a kitchen and a bathroom. So a new kitchen, new bathroom, that's going to add value, and things like a new access road or a car park. It's really important that you account for these in the right way, because otherwise HMRC could go back, open an investigation and obviously disregard. We see a lot of investigations into people claiming their capital expenditure in the wrong way. Let me know what you think. Make sure you're following me for the latest tax tips, tax advice. Comment below. If you'd like to get in touch with me, the link's in my bio for a free tax consultation. And as always, with anything tax related, seek professional advice.